this is the definition of a steady bullish grind. I mean, you really got to squint to see the slope on today's chart, but it's up and to the right, and it's good enough to get us through 65.
Yeah, we've been talking about the idea of the zombie, and the zombie was a market where vol just contracts and the market just kind of grinds mindlessly higher, and that would have to be unlocked by NVIDIA just not bombing, and that's kind of what
Yeah,
my takeaway was.
it's a friendly zombie.
Yeah, yeah.
It's not eating your brains.
That's right. And so they put up giant numbers. No one could tell me if they were better or worse than expected. And so what's the end result of that? Well, the VIX is now down substantially. We have Labor Day weekend coming up here, so people just are more incentivized to pound that vol. We were looking at the platform before. We're seeing a 6% implied vol for Tuesday, and we're on Thursday. We're not even on Friday yet. So tomorrow is going to be even, I think, more incentivized to kind of just crush that vol. This invokes
inflation goes smooth, right? That's kind of the last thing we got to get through.
Yeah, there's that data tomorrow, but I think what we've seen time and again here is like we need to be hit over the head with like a multi-standard deviation, hot inflation print, NVIDIA miss, something to make people believe in downside, because right now everybody's incentivized just to chase, and you see that out of every move, right? And so yes, there was jobs data and GDP data today. What did that even mean? It meant kind of nothing. So we're really in this situation where we need to catch something really nasty in order to force people's downside hand. And at the moment, what you have is just these derivative flows that are locking price in, and you got to kind of do something, or you have to have some kind of big enough data to break those binds, right? You can see in your chart there, we're pulling into that 6,500 level. There's a giant iron condor wing right there. That's the big blue strike. You see it. That's a
6505.
That's right. So that's the magnet for the day for today.
Okay. And we're there right now. So if we get through there, do we get to run?
No, well, for today, we're just pinning this thing down, right? And that's today's objective. I think tomorrow we wrestle in more or less the same area. And then next week, we're just going to crush vol. Like, no one's really going to want to own puts, right, or believe in sharp downside into a 3-day weekend. So, again, you really got to have some kind of just unbelievably nasty print tomorrow to make people change their minds on this stuff, because, nothing feels better than kind of sitting at the beach in the Hamptons or whatever, full on short vol that's guaranteed money, right?
I got 2 pictures, text today from people in various places of leisure, in the mountains, on the beach. Okay, so by the way, for those that have been following along, QR code in the middle to get a discount and on a freebie, right, for your guys' flow report, which is really good. There's a few other functions in here today that I want to get into, Brent, that so far we haven't really talked about too much. One of them is over on Trace, right? We were going to look at how some of this the grind has been happening. So that's kind of what we're looking at right there. The gamma walls you mentioned, we kind of got pinned a little bit, but if we break free, that could be really, really nice.
Yeah, and that's a 0 DT position. So 2 things about that. Number one is that is a 0 DT position, but we also have the JP Morgan collar trade, which everyone talks about. That's an end of September position at 65.05. So if we get above that, there's some sort of implied support, particularly as we get into September. So if we kind of clear that level, then everyone can kind of use that as their risk-off level going forward, right? It's kind of like, okay, there's a big position in the market. It sort of stabilizes things in through September. So, I think as long as we're now above 64.50, then we should remain stable. If the market starts to creep up a little more and we get into 65.50-ish, then we can really lean on 6,500 as being this big level of support due to positioning, right? And that's going to be the big level.
If we break through, then maybe we have a different conversation. Look, if inflation goes nice tomorrow, we break through that big wall, that 0 DTE at 65, then boy, it could be that kind of next stage of a late summer move that people are looking for. One of the things that you were also pointing out to me, I just went over to the scanners page on your platform, and we've got a few of the kind of main benchmarks I like to watch. NVIDIA's on here. You got home builders. We got the Qs in here as well. This is showing us where things rank in terms of IV. Take me through this, Brent, because I think there's a couple interesting things to glean from here.
Yeah, if you see dots along the bottom, those are low implied volatility options, right? So people are not expecting much movement there. And you can see across the board, for the most part, that's where most of these ETFs are in particular, like IBIT, which is Bitcoin, the Qs, MicroStrategy, Spire. That stuff is all clustered not only in the bottom, which infers that people don't have high volatility expectations, but the other interesting thing here is they're all clustered on the left of this chart. What that means is that puts on a relative basis are a little bit rich relative to calls. So
Okay.
if we do unlock this kind of grind and this sort of zombie thing for the next couple of weeks, then I would expect to see people start to pick up the bid for calls, which could accelerate upside, maybe more in something like the Qs or home building or certain stocks. So I've been calling them memes and themes. And we would expect to see some of these options prices shift to the right, which means calls are getting a bit rich. As an
Mm,
example of rich calls, look at gold. Gold has been doing really well. I know
I
we've been
see.
talking about that a lot.
So gold on the other end, which has generally been a really solid chart, but it's interesting that the call interest is stronger in gold than it has been on stocks, despite stocks being pretty firm too.
Yeah, that's exactly right. And I think there's a lot of political uncertainty or whatever uncertainty there is in the world draws that gold bid is the narrative around that. And so what this chart is telling me is like, hey, calls are pretty rich relative to puts. So maybe I'll buy some call spreads if I was interested in going into gold, but we're not at the overbought signal. The overbought signal tends to come or the extreme move signal tends to come when we slide north on this chart, when we move up the y axis. So if you look at Ethereum, for example, that's the Ethereum ETF there,
Hmm. Okay.
ETHA. That really had incredibly high implied vol going
Because
back
it was
about
just
8
going
months
crazy
now.
Ethereum, I guess, right? So vol was
That's
just
exactly right.
pumped up.
And yeah, and so when you see that implied vol rank move up to extreme levels, that's usually a sign the move is done. Now the move could be to the upside, the move can be an extreme downside move, but that's the options market screaming to you that hey, move is probably stretched a little too far. So the
Mm,
takeaway from this is that even though we're at all-time highs right now in the major indices, people aren't piled into calls at the moment.
mm.
And we may have just triggered with this all's quiet on the Western front in NVIDIA here. We may have triggered a little bit of call buying. I think that will come in, and that could drive single stocks, means, and themes a little bit more than say the S&P.
That's a really interesting perspective. So to basically recap it real quick, because I think this is a big part of the message from this week, especially given it's been stock specific and that tomorrow we get more macro with inflation, is that even though equities have been fine, you haven't seen a lot of aggressive call buying to the upside. You've seen it more in gold. But if things go smoothly as they are today and then tomorrow too, suddenly maybe this starts to flip around and you get maybe a more juicy type of momentum move to the upside, which also makes it sound like if I want to be bulled up, it's still, I mean, look, VIX is down today. It's pretty cheap to buy upside call exposure. But the idea is if you want to do it in gold or something's already been up there, then maybe you want to hedge it out with something as a spread.
Yeah, and the thing about this is like you're seeing the options prices in the scanner here on the bottom left. What is that telling you? Calls are cheap. So maybe you don't want to believe in this narrative of the market's going to grind up here, but the way to play it is very cheap. You can get calls,
Mm,
call spreads that don't cost much for September options expiration. Then if we do get some of this right taily moves in some of this popular stuff like small caps and IWMs, then your risk is defined, right? It's cheap risk and it's defined risk, and so it's a great way to play it. I know we just also wanted to check implied vols real quick. So if you go to the volatility tool, which is the second tab down,
okay.
one
Volatility
more down, there we
dashboard.
go. And check
Okay.
out the term structure here. I just want to show you
Term
what people's
structure. Okay.
expectations of risk are.
Oh, nice. Okay. So this shows us what yesterday's term versus today, yesterday in
Exactly.
white.
So that teal line is current implied vol. So next week, because we have this 3-day weekend, we're pricing in like a 6% implied vol. You got a month out, we're at a 9% implied vol. We're at about as low as you can get, right? And even though
Mm,
there's PCE and some of this other stuff, that's next week's problem. We're not even on Friday yet. Tomorrow, they're going to sink this vol even more. So a lot of
mm,
people are saying, hey, that NVIDIA thing didn't matter. It's a non-event. Well, look at vol's reaction here, right? The gray line is term structure. Yesterday's at the money implied vol. NVIDIA comes out, it's a nothing done. Stocks just kind of grinding along, and vol just got smashed. And if vol
mm.
gets smashed, that's going to put a bid into the equity market. And I think vol's just going to continue to bleed out here. Again, barring a standard multi-standard deviation print next week, then we should expect vol just to continue to drift. And that leads us to the big event, right? This is more of a time frame to be bullish as opposed to price. The time
Okay.
frame is September 17th. You got FOMC the same day as VIX expiration. Then you got a huge equity expiration 2 days after. So we really have about 2 weeks now to sort of cruise with existing positioning, dominating that vol suppression, which helps just keep a bid into the market.
Nice. All right. So vol starts to pick up a little bit pricing uh, after the Fed.
That's
So
right.
people still thinking about that, but looks like we got through NVIDIA smooth. We could sail from here. Great stuff this week, Brent.